Welcome, Parker Smith here, one of the founders at Caltier. Lucky to have Nathan Cloud with us, one of the partners at Discover Multifamily, and just one of our solid real estate partners we've been working with for years now. And wanted to briefly bring him on to talk about a new opportunity. In fact, uh, I was just there a couple weeks ago with Nathan. We walked the asset. It's called The Retreat, located in Houston, Texas. And Nathan, if you want to just take a quick minute and talk about the asset itself, and maybe a little bit of the backstory of how you're able to get this under contract.
Sure, happy to do so. And Parker, I believe this is our third partnership with
Yes.
Discover in Caltier. As always, we really value partnership and love working with the principals of the firm, and we appreciate your trust in this asset, which we are extremely excited about. A lot of your investors and our investors know the difficulties of last year in the capital markets and rates and operational challenges, and it was not an easy year for multifamily. We were very active on the acquisition front because our deals were doing extremely well. We've never had a capital call. All assets performed extremely well due to the way that we structured them. So we weren't anticipating, I would say, an acquisition in 2023. We were actively pursuing, but it had to be an extremely lucrative opportunity. And so the way that we source this deal, as we have with 4 of our 5 assets that we've acquired in our portfolio, is we developed an internal database.
Yep.
It's called the DMF Acquisition Database. And what this does is essentially it's an algorithm that goes through all the properties in Houston and all the properties in DFW, which are our 2 target markets. And it locates specific locations that we want to purchase in that exhibit certain characteristics for rent growth, occupancy, and then supply demand dynamics. And so once we have the location thesis, we drill down into 4 or 5 locations in Houston that we want to go acquire in. And within that, we can then overlay a separate system that goes in and it searches for undervalued properties. So we can locate properties in specific areas that we want to acquire in that are mismanaged by $200 rent deltas and 20 cents price per square. Essentially, deals that their rents are far below market.
Yep.
And so we then go in and we build a list. And I believe last year in 2023, and this changes every year, there were 60 to 62 properties in Houston out of about 1,800 properties in the entire Houston area. And so we located the Cottages of Cypress Wood, which we're going to rebrand as The Retreat, as one of those unique opportunities. And so we go directly to the seller through the broker and we submit an unsolicited off-market offer. Now, there's a very low hit rate in this strategy, but when we do come to a conclusion and a fair value price, it tends to be a very attractive basis and a very attractive acquisition. And so it took us almost a year from that first LOI that we offered on until we were under contract. The seller wanted about 20 to 30% higher, as most sellers did.
Yep.
In 2023, there was such a wide gap. But finally, due to not having capital in the operating accounts, they finally relented and gave in, and we got this deal at a 7 cap, 6.9 tax adjusted cap rate, which is the market was trading at the time about 5 to 5.4, 5.5. So we think we have a very compelling investment opportunity.
Absolutely. And for those that aren't familiar with cap rates and everything, I mean, a 7 cap in today's market is unheard of almost, and so Nathan and I were just talking just the other day, and I don't know if you want to relate this story, what your conversation with the broker, but just want to shed some light. Just, obviously, we're not guaranteeing any results, but just to drive home this point of, what a phenomenal deal this is.
All right. So every year we keep track of quarter by quarter basis where certain deals are trading on a cap rate, price per unit, and then the brokers do as well. And so every year you go back through and really see what the transactions were in that given year. And this is coming from a large broker in Houston, the second largest. And this was the highest cap rate deal that was acquired in a stabilized Class B asset. So again, that gives us a lot of confirmation and a lot of excitement around the potential of this opportunity.
Yeah, absolutely. And And even, fundamentals aside and numbers aside, I mean, it's a beautiful asset. If you want to just kind of explain a little bit, what you saw as well, and why you liked, when we actually walked the asset, what you liked about it as well.
Exactly. And like with every deal, we really appreciate you taking the time to fly down to Houston. Believe it or not, a lot of capital allocators do not do that to actually put eyes on the asset. So that's one reason we really like working with your team, and had a great time with you on site.
Yes.
Uh, Whenever you were about to acquire an acquisition, you're going on site, you're going north, south, east, west in a 1 or 2 mile radius. You just want to get a feel for the property. You want to get a feel for the location, and you really want to lay eyes on the asset. Is there going to be a lot of deferred maintenance? Meaning, did the seller actually put capital in the deal to make repairs? Or is that going to be very extensive when you acquire it? In this asset, there's almost no deferred maintenance, which is so surprising. There's only $3,000 from lender required repairs, 3,000, which is by far, hands down, the least amount of repairs that a lender has required on any of our acquisitions. But the property is beautiful. It has a little lake running through the middle. It's quiet. It's got big pine trees, and we branded it the Retreat just because it really does. It feels like a retreat. We are walking distance to HEB, which is grocery anchored retail and one of the best grocers in Texas. And so if you have a family, you're walking distance to the grocery store, you're walking distance to retail, you're walking distance to Starbucks, your kids are walking distance from one of the top ranked high schools in Klein, ISD, and we have massive floor plans. And so there is half of it is the modeling exercise to make sure that you can mitigate your risk through various stress testing measures. And the other half is the intangibles. It's the intangible factor. And it's walking distance to Starbucks, to HEB grocery stores, to a high school. I mean, this stuff really makes a decision in residents' minds. Say, hey, where am I going to rent, lease at? The Retreat or another asset that might not be as well located.
Yep. Absolutely. And just driving the area, like you said, not only the Retreat, which it does feel like a retreat, that's a perfect name for that property. And just driving the area, you can see the potential, and there's not a lot of assets like the Retreat in that area, which is great. And you get into the median income and what other, so it's a very attractive asset for tenants in that area that want to be in that school district, they want to go to that high school, they want affordable housing. It's within a certain mile radius for a lot of those major employers as well. All right, and just to kind of tie a bow on this, wrap this up, we want to keep this, as short and succinct as possible. Nathan and I could talk about the Retreat all afternoon. We love the asset. We're very passionate about it. But just wanted to kind of close this out and kind of, Nathan, if you want to touch a little bit on where we are at on the process of the acquisition process. This is a unique opportunity where most of the time you're raising money to acquire the asset. The asset has actually already been acquired. And so if you want to touch a little bit on that and the stage that you're at, where as far as renovations go and things like that'd be great.
Oh, sure, happy to. And so the asset, and this is a little bit unique as we are backfilling the equity. The asset was acquired and we closed in December of 2023. And due to the partnership with CalTIR, we engaged with your firm in October, November. And due to raising the new fund, we said, hey, we'd love to participate in this opportunity in the first few months of the new year. So we're happy to backfill that equity. Discover Multifamily Principles, we've invested over $3 million in personal capital. We are on every acquisition the largest investor by far, usually to 20 to 25% of overall equity, Class A equity. So we have a significant amount of skin in the game. And we're excited to backfill this equity over the next few weeks with CalTIR and work on another opportunity and hopefully many more to come.
And if I'm not mistaken, renovations have already started, right, on a few part of the asset. Is that correct? Or maybe I don't want to misspeak.
Oh, no, you're right. No, yeah. You're right. Within 6 weeks, we renovated 10 interior units, and this by far we're already achieving pro forma rents. And this typically takes us 2 turns of the rent roll in order to achieve that. This is by far the fastest that we've hit pro forma on any acquisition that we've acquired in. I think it's due to that location. So we've executed about 25% of exterior renovations already in a few short months. And I think right now we have, don't hold me to this, but 16 to 18 units already. So we're moving extremely quickly. We love the product of the interiors, and really excited after the next 2 or 3 years of this asset.
Absolutely. We're ecstatic and just really thrilled to be, do another partnership with Nathan Cloud and Discover Multifamily, and like I said, their treat is, I couldn't be more excited about an asset right now. So I'm just really, really excited to do this and appreciate your time, and we'll on to the next.
Sounds good. Thank you, Parker.